You've got $100,000 in Africa. You've got to invest it in something. You've got to put it into a building, into land, into an African currency, into something else. What are you going to do? There is 100% certainty that you're going to lose 80% of your money in most currencies over the next decade. There's 100% certainty you're going to lose 95% of your wealth over 30 years in just about every currency. And so you have to work through each of these issues and say, what's the cost of doing nothing? What's the cost of not taking a risk? What's the risk-free rate? Well, the risk-free rate is the monetary inflation rate. So the price that you pay to not do something is the rate at which the money is collapsing. If you were a Russian, they just lost 35% of their wealth by not doing anything in the matter of weeks. So in this particular case, you just have to look at the array of options. If you're an investor in South America or Asia or Africa, I would say the risk-free rate is much higher for you, right? Like you're in Lebanon, what are you going to do in Lebanon? How about Afghanistan? How about Iraq, right? What are you going to do? In all those situations, they're thinking, maybe I'll trust my money to Tether. You know, Tether's run by Bitfinex. It's just a company. So why is it that people in many countries are more willing to trust a company out of Hong Kong that's running a stable coin on the crypto network than they're willing to trust their local bank? Well, because in fact, Tether is probably a better bet than betting your money on most currencies in the world. Other than the top 12 currencies, the rest are collapsing.
Why do Tether if you can just do the US dollar or USDC?
Well, you can't. That's the point.
Yeah,
why do Tether if you could just do the US dollar? Okay, how many people in Africa can walk into a Bank of America in New York City, open an account, and then get the US dollar? None of them. That's the whole point, right? And okay, I did it. I'll give you an example. I put $1 million into Bank of America in Argentina when the dollar was worth 1 peso because I didn't trust the peso. I did it. What do you think happened? The government basically shut down for 1 day. They sent an edict to the bank saying all dollars must be converted back into pesos. Then they went off the dollar peg and they devalued the peso 10 to 1. And I lost 90% of my money. Okay, so why do Tether instead of trust Bank of America in Argentina? You tell me. Right? Because what's the odds that Tether is going to go to 0 in the next year? If the odds were 90% your money is going to 0 in the next year by putting it somewhere else, then you would think maybe that's a risk I want to take. So, you know, people are forced out the risk curve based upon the monetary policy. And in a hyperinflating economy, in Zimbabwe, right, you're going to take everything you've got, you're going to buy anything. I don't know if you saw, you'll buy toilet paper, you'll buy boxes of cereal, right? You'll buy anything. There's pictures in Turkey, people, and this is this year, people go into, they go into a car lot and they buy all the cars. Okay, so here's the news story. The government impounds 54 cars that were bought by a hoarder. Someone had the temerity to actually convert their currency into automobiles because they thought the automobiles would hold their value better than the currency. And then the government seizes their automobiles. Okay, if you look at every single war, right, the war always has the story of the speculators, right? The speculators, the smugglers, and the hoarders. What's your crime? Your crime was not holding your money in the currency, which was losing 90% of its value, but rather deciding to buy too many automobiles.
No, your crime was hedging.
Yeah,
right?
Something like that.
Picking an alternative asset as a storehouse of what you perceive to be security until the sovereign comes back and does one of two things that they're good at. Sovereigns know that debt, long term, there's the Jubilee theory, and also inflate your way out. This is or seize and force conversion, which basically feeds right back into inflate your way out.
Eventually, Yeah, all these countries will just inflate their way out, and the currencies collapse, and that's why they're all collapsing, right? That the currencies are weaker today than ever. I think that it's pretty obvious the dollar will also be printed to pay off the debt, and that will just manifest itself in the dollar continuing to lose value against scarce assets. It will gain value. It'll be stronger than the other currencies because they're just collapsing faster. So eventually we'll see a world where there's a dollar in the CNY, right? If you're not a very powerful empire, you can't maintain your currency. And that'll be the medium of exchange, and everything will be pegged to it or correlated to it. And then you're going to see monetary energy flowing out of weak property and weak assets into strong property. Like I would sell all the land I have in Africa and convert to Bitcoin. But I would sell all the land in Africa and I would move it to Europe, and I'd probably sell my land in Europe, move it to the US, and I'd sell my land in the US and move it to Bitcoin. You're just swapping from a weaker thing to a stronger thing. And the definition of weak is a function of what's the risk it'll be seized, taxed, or impaired, right? Regulated, right? So calculate that, right? Will the government, the jurisdiction that your property's in, be seized, confiscated, taxed away, impaired away? And the last issue is will be inflated away. Right? The reason that Bitcoin is magical is because there's only 21 million. I can create more real estate in New York City. I can create more cars. I can create more luxury watches. I can create more gold. I can create more shares of stock. I can create more bonds. I can create any commodity. They're commodities by definition. Given enough money and time, I can create infinite of any of them. Bitcoin is a scarcity. Okay, name another scarcity in the world, right? And technically, it's not clear there is another scarcity, right? A scarcity is something of which it is absolutely capped. If the price goes up by a factor of 1,000 or 1,000,000, it is absolutely capped. That is not the case with gold, soybeans, silver, stock, bonds, real estate, single-family homes, ships, planes, trains, nothing else. Everything else could be manufactured. And of course, if the price goes up, the incentive to manufacture more will go up, which is why, buying a house isn't necessarily going to be a great store of value in an inflating economy, because you're going to have incentives for someone else to dilute the value of your house. If you do buy a house, better off to buy a house on land than a condo on the 57th floor of a building. And if you do buy it on land, better off to buy it on waterfront property. And if you buy waterfront property, better off to buy it on the beach. And if you buy it on the beach, you're better off to buy it in the most desirable location of affluent, intelligent people for the next 30 years.
I'm sure Pat has something to
Scarce
say about
pristine,
this.
which you had talked about, right?
Yeah.
You're better to be at scarce pristine or as close as you can.
And and you can do that for 10, 20, 30 years. That's Palm Beach, that's the Hamptons, right? You can figure that out. Now figure it out for 100 years. This is the problem, right? When you go out
But for
100
the individual, though, who cares for 100 years? The individual. How many individuals think 100 years, though, Michael?
institutions think 100.
Institutions do, but how many? Even some institutional leaders only care about the return they're going to give you for a decade or two. They don't sit there and
Or next
think
quarter.
about 100 years.
I think here's the point,
I mean,
though.
that's one of the problems we have with our current political system, even we have in America. You know, the guy who gets elected, he only cares about 2 terms. How much can he really do? It's tough
The
to...
issue is the asset's reflexive. If I told you that you could buy this digital asset and it would lose all of its value in 17 years, then people start to amortize it down. And when it gets to be 12 years old, people start to discount it. It's like you don't want to own a building in London where there's a ground lease that expires in 37 years. Right? That's not as valuable as owning the land outright for 1,000 years. So if I told you it's good for 10 years, I think, and the other thing is good for 100 years, everybody wants the thing that's timeless, and the difference is going to create a marginal difference in the price. Let's say it's 2% or 3%. Okay, so all the intelligent money they stampede in the thing that's 2% better. And when they stampede the thing that's 2% better, liquidity is 10x more, and then the money collapses out of the other thing, and it goes to zero. That's why Bitcoin Cash collapses, Bitcoin Satoshi Vision collapses. Anything that's sort of like the same thing but not quite as good will go to zero. That's why YouTube is YouTube. Right? It's like there is a tendency of winner take all in these things, and it does matter, right? Now, you have children, you have grandchildren, right? I never met anybody that said, you know, I kind of want to keep my family generational wealth intact for 12 years, but then I don't care anymore, right? You sort of care. And there's one more element to this. It's not just the ability to know that the asset will hold value 100 years out, it's the portability. You know, if you're living in Nazi Germany in 1932, having portable property versus non-portable property makes a difference. Might make a life or death. There are people that are dead because they couldn't move the property, right? It does make a difference to be able to move it. So you can't blink your eyes and teleport $1 billion of real estate in Los Angeles somewhere else in the world. You can't even move it somewhere else in the country. Being able to move the money from a city to another city, from a state to a state, from a country to a country, and from a counterparty to a different counterparty, all of these things are extraordinarily valuable. The difference between life and death in many cases, and that's what Bitcoin gives you.